Welcome back to the deep dive. We're here to help you get informed, fast, cutting right through the noise. Today, we're diving into the latest numbers from Sona BLW Precision Forgings Ltd. You probably know them better as Sona Comstar. Their Q1 FY26 results just came out. And, well, they're a really key player in this whole evolving mobility tech space. This quarter is interesting because it shows some immediate challenges, definitely, but also some really bold, long-term strategic plays. So, yeah, we're going way beyond just the spreadsheet numbers today. We're going to unpack their strategic shifts, look at some pretty significant new orders they've bagged, and talk about their, well, ambitious vision. For you, the listener, it's a fascinating look at how a company navigates, an industry changing so fast.
Exactly. And for this deep dive, we've got their investor presentation, the board meeting outcomes, and their detailed press release. So it gives us a really full picture of how they did in the quarter ending June 30th, 2025, and importantly, where they're heading. Our aim is really to help you grasp the details, but also see that bigger strategic picture. What does it all actually mean?
Okay, let's jump right in. The financials for Q1 FY26. What's the headline? Well, on the surface, maybe a bit tougher than expected. Some headwinds showing up. Their consolidated revenue, it came in at Rs 8,509 million. If you compare that to last year, same quarter, it's actually down about 5%.
Yeah, and then you look at the bottom line, the net profit, or PT, that landed at Rs 12,247 million. That's a 12% drop year over year. The net profit margin was 14.3%. Oh, and it's worth pointing out the PT number was also hit slightly by about 69 million rupees. That was related to some exceptional expenses for acquisition opportunities they're exploring. So bit of a one-off impact there.
Right, good context. And then EBITDA. How did their operational efficiency look? EBITDA came in at Rs 2,025 million. That's earnings before interest, taxes, depreciation, and amortization, of course. And that figure was lower too, down 19% compared to last year. Gives them an EBITDA margin of 23.8%.
Yeah, and the management, they didn't really sugarcoat it in their release. They called Q1 FY26 a challenging quarter. They put it down to a convergence of multiple adverse factors. They did stress these are temporary, though, and apparently some have already started to sort themselves out. Now, they didn't list every single factor, but, industry challenges. It could be supply chain still acting up, raw material costs bouncing around, maybe even just temporary demand shifts. So for you listening, it's maybe not a huge red flag, but just shows the kind of volatility even growing sectors have to deal with.
Definitely. And what about the EV side, the battery electric vehicle segment? Sona Comstar has a big focus there. Well, their BEV revenue was Rs 2,106 million. That was actually down 25% year over year. It made up about 28% of their total automotive product revenue this quarter.
Right. And that dip in the EBITDA margin we talked about, they said it was largely down to adverse operating leverage and product mix. So adverse operating leverage basically means they weren't running their factories at full tilt, making each thing they produced a bit more expensive. And the product mix part suggests maybe they sold more lower margin stuff this quarter, even if it's strategically important long term. And that combination kind of flowed directly down to the adjusted PAT margin, even though they did get a bit of a boost from higher net finance income.
Okay, so you're hearing this and thinking, tough quarter financially. But here's the flip side. This is where it gets really interesting. Despite those pressures, management said they ended the quarter with large order wins, big ones. In fact, it pushed their net order book to its highest level ever. We're talking a total of 262 billion. That's huge. It's 7.4 times their revenue from last financial year, FY25. So beyond just being a big number, what does that actually mean? Doesn't that change things significantly?
Oh, absolutely. It's a game changer. That's not just a pipeline. It's like having over 7 years of work already lined up at current rates. That kind of visibility. It hugely de-risks their future, lets them plan R&D more aggressively, gives them a big advantage.
Wow, 7 years.
Yeah. And look at what's in that order book. A massive 75% comes from EV programs. That's Rs 198 billion. Non-EV is about 21%, or Rs 54 billion. And that new railway business they bought, that's 4%, about Rs 10 billion. It just screams future focus, especially on EVs.
Okay, let's break down those new EV wins. They mentioned two big ones. First, they got their single largest order in 2.5 years. This was from a North American OEM, someone they already work with. It's for supplying differential assemblies, the ones with the final drive gear, for a brand new electric passenger vehicle platform. This one order added Rs 15.5 billion to the book. Production's supposed to kick off in Q3 of FY28. And management seems really bullish on this one. They think it's likely to be one of the most significant and successful EV launches in many years. High hopes there. Then the second big win. This one was from an Indian OEM. They make both traditional ICE and electric two and three-wheelers. The order is for drive motors for a new electric three-wheeler. That added another RS 2.6 billion and production starts sooner, Q4 FY26.
And if you connect these to their overall EV strategy, they added 2 new EV programs just in this quarter. That brings their total now to 60 awarded EV programs spread across 32 different customers. It really shows how deeply embedded they're becoming in that global EV supply chain.
Definitely broadening their reach. And speaking of global reach, let's talk about China. They announced a joint venture, a JV, with a company called Jinnate Machinery Co., Ltd. Or JNT. The recent, pretty obvious, really. China's just, it's the world's biggest EV market. And the fastest growing, 11.3 million EV sales. That's like 66% of the entire global market. Getting a foothold there is critical.
Oh, it's absolutely critical. And the structure of this JV is interesting, too. Sona Comstar has the controlling stake, 60%. They're putting in $12 million. G&T contributes $8 million, mostly in assets and existing business. The idea is to combine strengths, right? Sona Comstar brings design, that precision forging expertise, driveline know-how. G&T brings high-end casting, their own IP, they mentioned 63 patents, and crucially, that local market knowledge and connection. They're aiming to become a key supplier for driveline systems in China. And they expect operations to start in the second half of this financial year. So pretty soon.
Okay. And another big strategic move, diversification. They finished buying the railway equipment division from Escorts Kubota. That deal closed on June 1st, 2025. So that business is now fully part of Sona Comstar. Its financials are included from that date onwards. It marks a whole new product area for them.
Yeah, it's easy to get hung up on that one-quarter dip in BEV revenue share, the 28% figure. But if you zoom out, look at the trend from FY20 through FY25. BEV revenue grew significantly over that period. It reached 36% share in FY25. So it shows that despite bumps like this quarter, their strategic shift towards EVs has been working long-term.
And we're seeing other shifts too, right? Like the share from micro-hybrids and hybrids increasing, non-automotive revenue growing, and geographically, North America taking a bigger slice of the pie.
And they have this ambitious tech roadmap they call Epic Mobility. It really suggests they're thinking way beyond just making parts. It's about moving up the value chain to subsystems, even whole systems. Some of the future products they mentioned are pretty eye-opening. Things like four-wheeler high-voltage e-axles, eVTOL propulsion units.
eVTOLs,
Yeah.
like flying taxis. Exactly. And industrial robot gearboxes, even humanoid robot actuators.
Right.
Seriously future-focused stuff. Plus, you add in the new products from the railway acquisition. Dampers, couplers, friction products, brake systems, automatic doors, HVAC systems. It's a really broad portfolio they're building.
It is, and it raises that interesting question, how does this very ambitious future tech stuff fit with their existing strengths? Because they are already dominant in certain areas, especially in India, with differential gears.
Yeah.
Like 55–60% market share in passenger vehicles, 80–90% in commercial vehicles, 75–85% in tractors. That's huge. And globally, they're not small fry either. 4.6% share in starter motors in CY24, 8.8% in differential gears.
Yeah.
So it feels like they're building on a really solid foundation while reaching for these new exciting areas, not just throwing things at the wall.
Right, leveraging existing expertise. Now, something else increasingly important for any company is ESG. Environmental, social, governance. Sona Comstar had some points to highlight here, too. They've been certified as a great place to work 3 years running. That's quite an achievement. They're also involved in incubating sustainability-focused startups, 18 of them partnering with IIT Delhi and IIM Ahmedabad. And they mentioned improving female participation in their workforce up from 3% to 6%. Still room to grow, but moving in the right direction.
Definitely. And on the E side, the environmental stuff, they reported some good progress between FY22 and FY25, like emissions intensity down 18%, water intensity down 17%, energy intensity down 10%. Solid improvements. They also mentioned their solar power capacity over 21 megawatt PA and their Punjakan plant getting an IGBC gold rating for green building standards. And governments-wise, they picked up awards like the Golden Peacock in 2023 and an ICSI award for corporate governance.
Their board structure looks pretty robust, too. 6 independent directors, 3 women directors out of 9 total members, and an independent chairperson. Ticks a lot of boxes for good governance. So wrapping it all up, this quarter for Sona Comstar looks like, well, a mix. You've got those temporary financial headwinds, definitely. But balanced against that, some really major strategic steps forward. Their big vision is clear. Become one of the world's most respected and valuable mobility technology companies. And they talk about values like growth, agility, vitality, frugality, returns, margins, and integrity guiding them.
Exactly. So while the Q1 numbers showed that dip we discussed, Those underlying moves, the China JV, that monster EV order book, getting into railways, they paint a picture geared toward long-term growth and, importantly, diversification. It's clearly a dynamic time for them. Balancing today's market with big bets on tomorrow. Of course, moving into things like robotics and eVTOLs alongside railways, that takes serious investment, and it might take time for those bets to really show up on the bottom line. That's the other side of the coin.
Absolutely. So thinking about all this, what does it really mean for you, the listener, and maybe the broader future of mobility?
Well, Sona Comstar's moves really do suggest this bold pivot, doesn't it? Beyond just being an auto parts maker into this wider mobility technology space, robotics, EVTLs. That's quite a leap. So maybe the thought to leave you with is this. What's it really going to take for a company that started out making precision forgings to genuinely lead in such diverse future mobility areas? And, maybe more critically, how fast can we expect these exciting new ventures to actually start boosting their financial results?